Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's headline inflation continued its upward trend in May 2026, reaching 5.4% according to data released by the Department of Census and Statistics. The latest figure marks the third consecutive monthly increase in inflation. Headline inflation has stood at 4.7% in April and 1.1% in February. Food inflation rose to 1.5% in May, up from 1.1% recorded in the previous month. Meanwhile, non-food inflation increased to 8.6% from 7.8%, contributing significantly to the overall rise in consumer prices. Core inflation, which excludes food, energy and transport-related items, also recorded a slight increase, rising to 4.5% from 4.4% in April. Of the overall headline inflation rate of 5.4%, food items contributed 0.7 percentage points, while non-food items accounted for 4.7 percentage points. Within the non-food category, higher prices were reported in transport, housing, water, electricity, gas and other fuels, as well as restaurants and hotels, clothing and footwear, and household maintenance. The increase in transport costs were mainly driven by higher petrol prices, while housing and utility expenses were affected by increases in LP gas prices. In the food category, prices increased for vegetables, fresh fish, onions, dried fish, milk powder and other dairy products. However, these increases were partly offset by lower prices for rice, coconuts, eggs, potatoes, sugar and coconut oil. According to the latest data, the inflation rate of 5.4% remains within the central bank's medium-term target range. Sri Lanka's listed companies reported a third consecutive quarter of declining earnings during the 3 months ended March 2026. Aggregate earnings of 271 listed companies fell by 11.4% year-on-year to 186.3 billion rupees. However, the decline was smaller compared to the contractions recorded in the previous 2 quarters, indicating a gradual improvement in overall corporate performance. A major factor behind the earnings decline was the food, beverage and tobacco sector, where profits dropped by 73.8%. The sector was affected by the absence of a significant one-off gain recorded by Brown's investment in the corresponding period a year earlier. In addition, Bukit Dara and Carson's Cumberbatch were impacted by an administrative fine imposed on their Indonesian palm oil subsidiary, Good Hope Asia Holdings. Meanwhile, Diversified Financials, the second largest contributor to market earnings, reported a 5% decline in profits. This was largely due to mark-to-market losses recorded by Capital Alliance Finance as bond yields increased amid heightened geopolitical tensions. However, after excluding major one-off gains and losses reported by Brown's Investments, Bukit Dara, Carson's Cumberbatch and Brown's Beach Hotels, underlying corporate earnings showed a much stronger picture. Adjusted earnings increased by 30.1% compared to the same period last year, reflecting improved operating performance across most sectors. The recovery was particularly visible in sectors benefiting from stronger consumer demand and the reopening of imports. The retailing sector recorded an impressive 404.6% increase in earnings, supported by higher vehicle imports and stronger sales volumes. Telecommunications sector earnings rose by 99.8%, driven by subscriber growth, higher revenue per user and improved operational efficiencies at Dialog Axiata and Sri Lanka Telecom. The real estate sector also delivered strong results, with earnings increased by 133% during the quarter. Banks remain the largest contributor to overall market earnings, generating profits of 47.3 billion rupees. Diversified Financials followed with 34.9 billion rupees, while capital goods companies contributed 32.1 billion rupees. Among individual companies, Commercial Bank reported the highest quarterly profit at 17.7 billion rupees. Hatton National Bank, LOLC Holdings and Dialog Axiata were also among the leading contributors to corporate earnings. Meanwhile, Bukit Dara, Carson's Cumberbatch and Brown's Investments recorded the largest losses during the quarter. Sri Lanka's export sector has recorded strong growth during the first 5 months of 2026, with total export earnings surpassing the $7.3 billion mark. According to provisional data released by Sri Lanka Customs, export earnings in May 2026 increased by 18.34% compared to the corresponding period of the previous year, reaching $1.57 billion. Meanwhile, cumulative export earnings from January to May 2026 amounted to $7.3 billion. The country's combined merchandise and services exports generated an estimated $7.39 billion during the first 5 months of the year. This represents a year-on-year growth of 7.56% compared to the corresponding period in 2025. Merchandise exports contributed $5.76 billion during the January to May period, recording a growth of 7.63%. At the same time, services exports continued their positive momentum, increasing by 7.31% to reach $1.63 billion. Merchandise exports in May alone amounted to $1.22 billion, reflecting an increase of 18.25% compared to May 2025. Services exports generated an estimated $347.15 million during this month, marking a growth of 18.67%. Commenting on the performance, Sri Lanka Export Development Board chairperson stated that the export sector had demonstrated resilience and sustained growth throughout 2026. He noted that surpassing the $7 billion milestone within the first 5 months reflects the strength and adaptability of Sri Lankan exporters, while the strong performance recorded in May highlights the positive direction of both merchandise and service exports. Among key sectors, apparel and textiles continued to perform strongly. Export earnings from the sector increased by 6.66% to $414.72 million in May 2026. The growth was supported mainly by higher exports to the United States, which remained one of the sector's key markets. The coconut-based products sector also recorded notable growth. Export earnings increased by 17.13% compared to the same month last year. Coconut kernel products, coconut fiber products, and coconut shell products also recorded positive growth, reflecting strong international demand and increased value addition. In the services sector, ICT and BPM exports maintained steady growth and were estimated at $158.21 million in May. The sector continued to strengthen its contribution to national export earnings and reinforce Sri Lanka's position as a destination for technology-enabled services. However, tea export earnings recorded a slight decline of 1.12%, reaching $130.3 million during the month. The decrease was mainly attributed to lower export performance in several Middle Eastern markets, including the United Arab Emirates, Iran, and Iraq. Despite the decline, the tea industry remains a significant contributor to Sri Lanka's export earnings, supported by its established presence and reputation in international markets. Sri Lanka's foreign exchange earnings from tourism declined in May 2026, despite a record increase in monthly visitor arrivals, according to a recent development based on Central Bank of Sri Lanka data. Tourism earnings fell by 5.13% year-on-year to $155.7 million, down from $164.1 million recorded in the same period last year. Earnings also showed a marginal decline compared to the previous month, reflecting continued pressure on sector revenue performance. This decline came despite tourist arrivals rising by 10% year-on-year to a record 145,745 visitors during the same period. The divergence between rising arrivals and falling earnings has raised concerns over declining per visitor spending and overall tourism yield. For the first 5 months of 2026, tourism earnings dropped by 12% year-on-year to $1.36 billion. This indicates continued strain on the sector's contribution to foreign exchange inflows despite recovery in visitor numbers. Analysts noted that average earnings per tourist remain under pressure, suggesting that volume growth alone is not translating into stronger revenue performance. The situation follows a revision in tourism revenue calculations introduced in the previous year. The Sri Lanka Tourism Development Authority reduced its estimate of average daily tourist expenditure from $172 to $148 following a new survey methodology. This adjustment has resulted in lower reported earnings even as arrivals have increased. Analysts have further suggested that the sector must focus on increasing visitor spending and length of stay through higher value-added tourism offerings in order to improve foreign exchange earnings. The May performance also reflects broader structural challenges facing the tourism industry, which continues to recover from multiple shocks in recent years, including the 2019 Easter Sunday attacks, the COVID-19 pandemic, and the 2022 economic crisis. In 2025, the sector generated $3.22 billion in earnings, a marginal increase from $3.17 billion in 2024, despite a stronger rise in arrivals. That gap between arrival growth and revenue has intensified calls for a shift towards attracting higher spending tourists rather than relying primarily on volume growth. The government has set targets of 3 million tourist arrivals and $4 billion in earnings for 2026, supported by an upcoming global promotional campaign. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 10.14%, up by 12 basis points. The 182-day T-bill rate stands at 10.21%, up by 5 basis points, and the 1-year T-bill rate stands at 10.17%, up by 1 basis point compared to the previous week. Thank you for watching. We will be back next week.